Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, May 13th. Hope you guys had a wonderful week. And this week, unlike last week, is going to be action-packed this week. We got today, which we'll go to, is the retail sales. Later in the week, we got some manufacturing news from the Empire State Index, New York region, and the Philadelphia Fed in the Philadelphia area, as well as the Michigan sentiment coming in on Friday. So those will be impactful news or data that's going to impact the markets this week. So again, talking about retail sales, here's the primary retail sales numbers for the month of April. So in March, we had a negative 0.5% growth, so obviously it contracted in April. We figured it would be around that same number for the month of April, so actually improved. So very little in April, but better than what we expected. Now, if we take out the autos, which are the big ticket items, we don't have as big of swings in our market with those big numbers. So this is kind of like what we call the core, kind of like a core number. And we had a negative 0.4% in March, and we had so our estimates will be pretty close in the same range with a slight improvement of 0.3, and it came in at negative 0.1. So not great numbers on the numbers, but because it didn't meet the worst expectations, the market is liking a little bit better. So let's go ahead and take a look at the fundamentals here. And the stock market's a little mixed. The Nasdaq is the only one that's up currently, and it's only up slightly, whereas the Dow and the S&P are down a little bit. And it's not so much about the retail sales that's bringing it down. It's actually an article that came out in the Wall Street Journal that the Fed, talking about the Fed's whoever using exit strategy. There's a article published discussing about how the Fed's going to go ahead and exit their bond buying purchases, which is approximately $85 billion per month. That's one reason why the stock market's been taken out so much, that the Fed is putting in so much money into the economy and helping things go out. Now, the key is not so much, obviously the Fed should be providing an exit strategy, but the problem is when. We don't know as to when this is going to happen. The Fed hasn't, they're still watching data as it goes on. And so right now the market's kind of having a knee-jerk reaction to it, and automatically thinking worst case scenario, maybe it's going to happen tomorrow, which most likely is not going to take place because we are showing some soft patches coming up here in the economy where the Fed's not going to go ahead and pull that back when we are showing some soft patches. So this is key. Again, a knee-jerk reaction is kind of heading into the stock market today. So we'll go jump in the bond market and take a look and see what interest rates are doing. So we're going through a bit of a correction now. As I mentioned before, we will at some point have at least a short-term correction in the bond market, because anytime as fast as it goes up is as fast as it can come down. So a more longer sustainable one would be if we can kind of gradually go upwards in the bond market to improve our rate. So right now we're kind of going a bit of a correction. We started 27 basis points lower than where we left off yesterday, and right now we're up about 9 basis points, kind of making that up and making up for the opening gap to the worst. So again, we're kind of watching. So what that translates is that rates are worsening from where we left off. If you look at the 104.80ish or 104.70ish range where we started to where we are now, that's almost we're about 1 point difference between the two here. So because we also had that 27 basis points bond rollover. So if you factor that back in, what we had up here when it was at no point is now going to cost you about 1 point. So that's where the pricing is coming into, what that translates. So 100 points here, so 103 and 102 means it's a 1 point difference in the pricing. All right, hope you guys understand that. And if you guys got questions, always feel free to stop by and check it out. But pricing has gotten worse. And short term, be careful. But if you're looking long term, yes, I do believe it will rebound, especially when the stock market does its correction at some point. All right, folks, you guys have a wonderful day. We'll see you guys tomorrow. Thanks for watching.